investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Tuesday, the 6th of August, and we're looking at the S&P futures up 51 at 52.68. And what I'd said in the den earlier on is that I'll go through the first. Now I go one step at a time. That we were in a trading range, and that trading range says that if there is a narrow rectangle, just remember, in a narrow rectangle, you keep thinking it's going to break to the upside, and it doesn't. And you think it's going to break to the downside. Keep staying in the rectangle. It is so frustrating unless you treat it as if every time it gets to the base, you go long, and every time it goes to the this is the trend line, horizontal trend line, it's going to be repelled. And then there's a moment where it will break. And then there's a whole thing that I've done with my webinars on the narrow rectangle. If you break halfway through the midpoint of the rectangle, then you can go down to the bottom. When you return, it needs to go back above the halfway marker and actually take out the top horizontal line, and then you're on your way. There's a brand new move to the upside. Well, we did that. We were stuck between 52.34 and 52.43. I think that was the number, all the way for about an hour. I mean, that's a long time in a 1 minute chart. And then what happened is it went above, went below, went back above, and then it broke out to the upside and above the 200 period moving average that has been a resistance area for so long, and now it's up. And I'd said you want to touch the 10-minute 200 period exponential moving average at 52.72 to say that we've got follow-through buying from yesterday. We just did that. We've got follow-through buying from yesterday. What happens next? Yeah, that's important. But the fact that we went to the 200 period moving average after earlier this morning, we went close to it and then failed, is really important. And it's only a leg A to the upside in the 10-minute chart, a leg A to the upside in the 5-minute chart. Wow. Is that going to be at peak A, B, C, D for the rest of the morning? We'll see what happens. Meantime, it's really good action. I wanted to get that out the way. Now we've got along the support in the E-mini is going to be in the 52.60 to 52.58 area. Got that out the way. All right, that's technical. That's live. As we were on air, everything was being done, so there was nothing there. That I love it when you have analysts and they do the look back. Well, when I do the look back, I mean, let's face it, you can say anything you want because you're not going to be wrong. I'm going to say, oh, the Dow, let's see, the Dow could have hit a round number high. Could be an all-time high, maybe 41,376. Oh, look at that. On the 18th of July, where did it go to? It went to an all-time high of 41,376.00. And then what did it do? It kind of came tumbling down below to the 38,500 level. And let's see, maybe now it could have a rally above yesterday's high. Oh, look at that. That doesn't do a thing for anybody. What you want is to be able to look at your technicals and say, this is what's going to happen next. Now, I'm a little embarrassed because I spoke about all this. We had a semiconductor short, SOXS, 3 times short for a brief period, make some money, and then stopped out at exactly the exact low, and then it screened to a double. All right, we missed that. But anyway, now we've got the upside, and I have to have fresh thinking. We raised so much cash. We want to put that to work immediately. So we've begun doing that, and we've got the Dow at 39,110, up 400. We are long the Dow. We're kind of aggressively long, adding to our long-term positions, and I don't know how long that's going to last, but all I can say is that what you want to see is this trend line resistance, this diagonal trend line resistance, which has been raised now a little bit. So the low that was made on the 2nd of August was 39,358. That's a little higher now, day by day. It's a rising trend line. At this point, it's 39,428. Wow, that is a long way to go. So let's give it holding, not breaking the low of yesterday. Let's just say that it doesn't break, not even 38,500. It doesn't break 38,750. and we continue rising, if these are all Fs, because this is what you have to do in analysis, what would get the Dow to go to the 39,400s? Well, the MACD, look at the distance between the 9-period moving average and the 26-period exponential moving average. That's a 9-period differential. That is a big distance to get positive. So this has to be a work in progress. It's not going to be a simple thing. Look at the relative strength that has failed. It's gone down to the lowest level that it's been in, for about more than a month. Look at the stochastic. That's not a bad sign. That's 23%. I was expecting that it would go to the teens or maybe in the single digits before we get a really strong buy signal. We'll see if that's still going to be okay. I need to talk about something else. I want to talk about this, and I mentioned this for subscribers. This is, I'm going to get out of that. That's not what we're looking at. We're looking at INDU. There we are. So in this particular chart, the Dow hit exactly this trend line. This yellow background chart is my DNI. It's the Chapman Wave Dark News Index. It's all based on the Dow. And I always look at this as internal lows, residual lows, like an earthquake and an aftershock. Internal high, residual high, internal high, residual high, internal high, residual high. This is March the 20th of 2024 this year. And then we get internal low and residual. That's April and May. And it goes to higher highs. And it makes very quick, in 3 days, it goes internal high, residual high on the 15th, around the 15th of May, and then plummets down. Then we make a trend line support, internal low, residual low. And what happens next is that we go to an internal high, and I was talking about it was just the speed with which we came down that we missed opportunities to go short. And look what happened, internal high, residual high. That's the DNI, that's the Dark News Index, starting on the 8th of July, and it wasn't interest rate related. And that's really interesting because all the time for up until this year, every other was interest rate related, and that became a much more serious decline. Now what we're looking at is, yes, we've got possibly an internal low. I'm putting it in, and we'll see, does it make a lower low for a residual low? Does it make the same level, or is it higher? We'll see. But I'm putting here IR. We don't know if this is accurate, but I'm putting it in as this is an internal, not an IR, it's IL. IL, sorry. I was talking at the same time. Showed you. Sometimes you can't talk and chew gum at the same time, but not me in this case. Okay, and now there's a green candle. Day's young. A day's not even an hour. It's 45 minutes into the day, so we don't know what's going to happen next. However, this is a very encouraging sign. That wasn't the issue. This is the absolute, for me, this is issue number one. It's subdivided into 2 parts, and that's already accomplished. That there's a real good chance that we've made an internal low. Here's the other one, the VIX index. Can you go from 65, darn, I did the wrong thing again. Can you go, got the break already. Let me do this as we're going to the break. VIX.X. Look at that. 65.73 was the high yesterday in the volatility index. The only time we've even been close was the March low of 2020 when it went to 85.47. I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So let's go back to that. So we're talking about the volatility index back in March of 2020, 85.47. That was coronavirus, business, the Fed, everything came together to make a climactic low and a high in the VIX index. 85.47. It then went down. The most recent low was actually, now let me just show you this to take a moment. There's no rush now. We've got some kind of low attempting to be established. We'll see if that's going to hold. And now look at this. This is a CBOE volatility index. There's a monthly chart. And at one point back in the 2012, 2014, 2016 era, going all the way to 2018, we were under 10. We went from the 14s down to the 10s, and then down to the 8s, 8.84, then 8.856 was the low back in 2017. And that spiked to a higher yields in February of 2020. February of 2018. Yields, tariff, China, Saudis, I mean, the story never changes, I guess. Anyway, so here we are. That was at 50.30, and then it had this huge spike to 85.40. Can you believe? Are you telling me? I know all the news media are talking about that. This, I mean, if you listen to, I don't want to go through who and where. It's just there are people talking about this as if this is the end of the world. Even the coronavirus wasn't the end of the world. It was the beginning of a massive move to the upside. In fact, we are still long the diamonds from 2020 low. We're still long the diamonds from the spike in October of 2022. 2022, right there. That October high, I didn't even put it in. That was that was the January high. It was earlier. Anyway, made in October. October 2022. And we've been long, like Microsoft from October the 31st of last year. But in the meantime, back at the ranch, this spike, that was just a conglomeration of news events that were headlines. But the market is saying, yes, it is important, but it's not as important as the coronavirus high of 85.47. Yeah, so look how these things work out. So I always say that the measurement of the volatility index, that's the hysteria, has to do, it's all dependent on the news. You know how I talk about the news media as being the most important echo, or the most important chamber of information, and it's exacerbated, it's changed. It used to be the news, and you got your newspapers. I mean, back in the early, 1960s, early 70s, we used to get the Boston Globe. We used to get an update at noon, and then an update at 3 p.m. or 4 p.m. The front page was a brand new front page. Things have changed. The speed with things have changed. Therefore, I'm saying I'm not ignoring. What I am saying is that this, and I'm going to type it in, 65, what is it, 65.70, 65.23, 33. That keeps changing because I don't read it. Yeah, it is 73, 65.73, high of yesterday. I mean, if I just saw this VIX index, I would have said, that is unbelievable. I don't know what could have done this, but it must have been the most horrible event. And I don't know where the market is. The market must be at the yearly low. No, not at all. No, it was just the way the news works. And all I can say is that this is mostly overseas. It was national as well, but it was a lot from overseas, Japan and everywhere. So I'm just saying that going from 65.75 yesterday, just a little earlier than this time, to where it is now at 27 point, it's cut less than half. That is big. Now, if you do your homework, you'll find that you don't always get, I can't remember exactly when it was, but there was one time when the VIX made its high and the markets didn't make their low. It continued lower for quite a while. So you can't get an assimilation that gives you exact correlation between the high of the volatility index and the low in the market. So I'm saying this is a low, not the low. I don't know yet. It's a low, and it's therefore, now let's go back to this. That low might have to be retested. Look, the 200 moving average is at 38,099. It's going to 38,100. So there could be an arch formation, and then we stall, and then we come down and test. I don't see this right now as a V-shaped formation going straight up. I see it a work in progress. And that's the reason why we've got our positions, we've got our stops. As soon as we get at least a comfortable profit, each time we take a little bit off. That's the way we work things. It's really important to pat yourself on the back physically by taking something off the positions, because that's the way that you garner profits, that you stay in the game. And yes, it isn't like doubling up and tripling up when you're going to highs. It's the other way around if you have a newsletter, because you want people to stay in the business. You want them to be around for the next swing. And that's all I can say, is that we've got our positions. We'll whittle away a little bit as it moves up, if it's appropriate, and we'll go from there. Look, the 9-period moving average in the weekly chart of the Dow is still good. Look, the S&P weekly chart did turn down quite sharply, but it's still 9 is way over the 14. Well, and as we speak right now, up 68, that means we've made a leg A, gray leg A. We didn't do that until you get above yesterday's high. Really nice. There's a ton of resistance right as we're speaking on the 1 and 5 minute charts. If we can break that, that's going to be very important. Let's go on. Look at the QQQ. Nice move. It's added now. It's at up 5.12 at 440. Look at the SMHs. Now, I had a choice. I could have gone for 3 times long on the SMHs. That would have been a really good rebound. but I think they still need some homework. They're still they're in a place that says, yes, you can rally, and I'm almost about to put a down arrow. I should have actually put the down. I think I have to put the down arrow. I should have done it at the end of last week. It's just a sell signal. It's not a sell mode, but it is a down arrow. Oh, no, I can't. The 9-period moving average is still green. All right. Wow, that is a deep, deep correction from 283 to 200, 83 points. No, I have no choice. I have to do that because of the price movement. Sell signal, not a sell mode, in the semiconductor weekly chart. All right, let's go on. And now let's go to the IWM. Russell 2000 is still rallying. Yes, very nice. It's up 2.66 at 204.81. Now, a lot of people said, all right, that was it. It was a one-time thing. Small caps had their rally, but that was really a fake out. It's all over. I don't really think so. The way that the IWM rallied from the low yesterday, coming back strongly towards the close, and today making a new recovery high, I think that the small caps are here to stay, at least for the next couple of weeks. I could be totally wrong. If we go to 195, we're at 204 right now. If we go to 195, I am completely wrong. But I don't think so. The nines are very good in the weekly. I'll be back. Dow's at 433. S&P is up 64.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. So I just wanted to mention this. I typed into the den. It's just a point of note that when there has been just intense selling and it's been going on for a period of time, when there's a tidal change, you've got to mentally identify that, because the theme is that you've been shorting and being correct, and you're shorting. You want to keep doing that. But now I think what we're looking at is there's a chance, there's no guarantee, but there's a chance that we're getting something a little different, that the buyers are now coming in and the shorts have had their turn. Now the buyers need to have their turn. So it's a tidal change. That's what I like to look at. Maybe just a short-term tidal change. Wow, looking at, who was it, giving this documentary on Ireland last night. I can't remember his name. But, oh, man, those waves are just, those beaches and those waves are fantastic. Yeah. All right. So here we go. Let's get back to our story. And we were talking about that there have been times where the huge spike in the volatility index has seen some kind of a change, but the markets did bounce, but then they went to lower lows and lower lows and lower lows in a very gentle way, just kept going. So that's something to keep in mind. But this one here is one where I think what we've got is that internal low. There's going to be a bounce, pretty nice bounce, I think. And then we'll see how we do the retest for the residual low, if that's going to be the case. I don't know, could be wrong on that. Okay, so look at this IWM. I've never seen an island reversal. I'm sure it's there. I do remember very strong island reversal, sometimes not after days, but after weeks. But you don't usually get this number of gaps to the upside and then gaps that are to the downside. We haven't even filled one yet. So it's just a work in progress. We'll see. My suspicion is that the whole thing is, if the IWM actually is able to get into this candle from just 3 sessions ago, no, it would have been Friday, right? That would be with a low of 206.99 and a high of 211.19. If it can get even just like to 208.40 over the next week, that is a big ask. But if it is able to do that, that's going to be really important, because it gives it time for the MACD to try to resolve its really wide 926 period moving average. That aperture is huge, but the stochastic is already on its way to try to do that. On balance volume is a little bit better, and the relative strength is still S, which means that it's still weak. So it's a work in progress. I wanted to go to GDX. Had a question about that. Yeah, nice candles. The same thing we've been talking about. This is new, a gray leg A. There was a peak D right there, and we only went a couple of days pink in the 9-period moving average. It's trying to repair some of the damage from yesterday. The low, it's a 35.58. I think over the next 3 days, it just needs to tag 36.20 once, just to tag it, to fill in the gap. Actually, 36.10 or so fills in the gap. I'd like to see 36.20. And look, the weekly chart is still nice. The 9-period moving average holding over. Let's look at Newmont Mining. Newmont Mining, very nice candle today. Look how well it's doing. This is one of the best. Newmont Mining Corp, gold miner. We're not in it. I almost put it to our list today. I haven't yet. I think out of all the gold stocks, this is the one that appeals to me. Yes, it is at close to the most recent high, but not the all-time high of 86. Whatever the high was in April of 2022, that was at 86.37, plummeting down to just under 30, and now it's trading at 47.75. That's nice action. All right, here we go. What am I going to do next? I said I would do the silver. Silver is trading Now, that's not as strong. Look, that's quite weak. Down 0.03, 27.17, under the 200-period moving average. Now we've got different charts entirely. The gold chart is a lot better than the silver chart. Question, Basil, AEM. AEM, yes, we spoke about that yesterday. Was it yesterday or the day before? And I never finished the notation on AEM. Let me just do that now. Didn't I do that? Well, I couldn't have done it because it would be here. So this is your low that was made back in June, early June. We go peak A. Oh, I think I did it. I just pointed. I did it with my pointer. I didn't do it. So that's an A. That's an A underneath. So this becomes a B. That becomes a C. That becomes a D. And plus sign goes above the D. And this becomes an E. But there's no down candle yet, because it held beautifully, the 914. Yes, AEM trading at 74.74, up $1.57. So let's go, this would be the low. So let's go from here, A, B, C. That A wasn't taken out. I mean, that low wasn't taken out. So it's a continuation pattern. Next one is a B. Now, and then a D. Okay. Now, I need to talk about something that rarely do I talk about this, because it doesn't happen that often. When you get an identified, there's no other way. That is a peak C right there. There is no C1, C2. That's where it's very close to making a leg D, but it fails. But it acts like a D. No, that is a C. The rule of thumb, and I've mentioned this before for those of you who are really interested in Chapman wave methodology, my rule of thumb is that if it takes a long time to eventually get 3708, 5708. Okay, 5716. Is that possible? 5708. Yeah. Okay, it's 8 cents higher. When it eventually gets to a D, be prepared to go D, and I couldn't even tell you how many times it goes to an instant restart almost immediately. And what I tend to do is I continue going E, F, but I'm prepared to consider that is the chance of an alternate count, F/B, then it goes C and a D. So in this case, I don't know if that's going to work. I'm just going to go as, look, that G, there's never an H. So I have no choice but to say, keep it as simple as possible. Treat this as a brand new A and a brand new B. If it fails, it fails. But in the meantime, normally what I would find is that it goes peak D. After a long period, the C takes its time, then it finally gets to a D, and then we get E, which turns out almost always to be an A, and then F becomes a B, and that becomes a C and a D. But I'm not doing that right now, because that dip from that peak F in a weekly chart, this is not a daily, this is a weekly, that took a month, over a month, to get to the new leg up. So as a result, I'm not going to do that. I'll take a break as we're coming up here. The Dow is now up 443, S&P's up 73. Really nice session today. And I want to go peak A, B, C. It's a leg D in the monthly chart. Yes, excellent action in Anglo-American.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust. The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So let me just say that the AEM is acting very well here, and that I actually have a target of 89.23. It's at 74.92. If I do it my usual way with the cup formation, left side, I take a particular trough and I do the inside wedge, Chapman wave dash green, target resistance line. I'll go one step at a time, and I'll just say that in the next month and a half, the 82.94 area, I'd give it until, let's see, it's August, September. I give it towards September, maybe October. I don't know about the 82.93 being all the way into February of 2025. I think if this is going to happen, it's going to happen in 2024. But in the meantime, it's acting very well. So AEM, and it has tremendous support at 70. It's at 74.95 right now. So let's just watch that. Meantime, back at the ranch, questions came in. I got to get them. Yeah. So a statement more than a question came in about, I called it A low at this particular point. Let's just go back to the Dow. I called it A low, not the low. And the statement was, hey, October you called it A low to start, and then it actually turned out to be the low. Yeah, there's no question about that. And but I did upgrade the power, and I used Microsoft to do that. And sometimes, as I said, you make a V-shaped turnaround, and it's not this H pattern where it's got an arch formation with a retest. Maybe we don't get it because there were so many people bearish. And if you read the paper or anything like that, from even just stories from yesterday, the lay folks were talking about this crash, et cetera, et cetera. There was no crash. And what, 1,000-point down in the Dow close? You remember May back in 2000, and was it 14 or something? You remember that? I remember I was at Boston College with a friend of mine mid-session. I took off. I said, okay, let's go play. We went to play tennis at Boston College. And then during one of our little breaks, I looked at my cell phone, and I saw the Dow was down 800 and something points. So I said, okay, Jim, let's finish this off real quickly. I got to get back home. And I got back home. The market was down 1,000 points. And we made that turnaround. It was an aberrational day, 1,000 points down. But if you remember back in 2009, we had 1,000-point sessions. That was that was huge because of the crisis. So, yeah, anyway, the fact is, we'll see what happens here. There's a big gap that has to be filled. There was a Chapman Roman candle 3 days ago. It was on Friday. Yesterday we almost made one. It wasn't quite the same. Didn't have the same impact, but we've actually had a real nice intraday after an hour and a quarter. This is the kind of rally that you want to see. And what happens is the stupidity that you feel. Like I felt when I talked about the SMH as being the weakest sector and they were going to go down, down, down. And then I didn't hold those short positions. You look so stupid in the V-shaped turnaround when yesterday the world was ending and today the sun's shining and, you got to put your dark glasses on because it's so pretty outside. And then, yesterday there were people selling, and today the prices that they sold at, they can't get them today. That's the thing about turnarounds. And I needed to see that there was something like it today. Otherwise, that wouldn't have been a really decent low because we'd be, instead of being up almost 500 points in the Dow right now, we'd actually be down another 400-500 points. That would be terrible action. So at this particular point, as I said in the den, you've got to you'll change your thinking. I personally would not do any shorts today. You've had your chance. They were just, they were fantastic on the way down. Now you have to change your mindset. You got to be buying the dips. And this is what I'm thinking anyway. All right, let's get on with our show. And what we wanted to do, the couple of questions came in. Where did they go? One question there. Yeah. Jeff, 1,000 isn't what it used to be. Okay, now this is going to be very interesting. Let me go. There you are. So what I'd said was, I think there's a chance that the 10-minute and 5-minute charts can go into buy modes and the E-mini and stay that way for a while, all morning. And look, we started a leg C in the 5-minute chart. We're only in a leg B in the 10-minute chart. And that should still go to a C and D because we're in a buy mode. Buy modes in the Chapman methodology invariably go to at least 4 higher peaks. All right. So this is still very positive. And look at that candle just in a 10-minute chart. One candle went from 52.80 to 53.04. That is amazing. And this is a brand new look. There's your peak C, C1, C2. I spoke about this earlier. I think it was referring to something else. And this particular, I changed it to red, acts like a D. Now you've got your new buy signal for the 1-minute chart. It's in leg. Yeah, I think that's it. Now that we're getting 25-cent increments, they're so hard to see. 82. Okay, so this is still leg A. Now this is what I tend to do. That should be leg A, but that parallel high with the on-balance volume making a little hiccup, I tend to put in a red phantom peak A. So that's an A. It's not really. I'm calling it a phantom because it trades in 25-cent increments. I want to be ahead of the game. That's a C. This is now it should be technically a leg D, but I've made it a phantom peak C, a peak A right here. So this is a D, but it's not really a D. But I'm ready to say, okay, could turn around from here. So be ready. That's all it means. The MACD is good. Stochastics at 94%. That's fabulous. On balance, volume, blue line, is a little bit overbought. And the relative strength index right there still holding very well. So we'll see what happens. Okay. I needed to do that. Now, this is very important. Here we go. I've been holding off on all of these, and I held off. I was about today. I didn't do it because we did something else. We did other buys, and I didn't want to overdo the buys, although normally in the old days, whenever I got real strong buy signals and I'd raise cash, I would go into bank stock related to a brokerage area. I'd go into the highest PE tech stock that I'd been following. I'd go into it'd be 5 areas that I'd go into fully invested and then just sit through until I got a sell signal. I'm trying to get back to that to make it as simple as possible. I don't know if we'll be able to do that, but I'm starting to get back into that rhythm, and we'll see what happens. Dow's up 497, S&P's up 85. I'll be right back.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry Pesavento Friday, July 12th and Friday, July 26th, 9 a.m. to noon Eastern Time for 3 hours of live trading. For this month only, use promo code LarryJuly24 at checkout to save $50 on your first month subscription. For all the information and to reserve your spot today, visit the front page of TFNN.com.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
All right, so yes, besides what we went into yesterday and today, I had 2 other stocks that I had in. The first today. One has had a really nice bounce. We were in it. I should have held it, but we have stops. You can stops. That's what they're there for, just to protect you. And I want to get back in. And the other is Palantir. I said it's doing. It looks much better. Well, not only much better. Look at that, off the 200-period moving average, Palantir technology. And I'm not going to. Yeah. Okay. So and gapped up today on earnings. It's at 26.64. Yesterday morning, it was at 21. That's 5 points. That's what is that? That's 20%, right? So within that context, It's doing very well, but it was looking pretty ugly. So this is one where it's really volatile. If you want to be in it, you got to have quite a wide stop if you want to stop at all, or if you really believe in the company, that's different. But it is making higher highs in the monthly chart. It is in leg E. We'll have to wait for the whole month to see if we can get into the 30s, and that'll continue leg E. And then Jeff in the Tiger YouTube. You said, I did see what your comments on the monthly, but I don't know what monthly charts you were talking about. So if you could put that in. Now, I'm going to be doing my show tomorrow at 8 o'clock to be recorded, to be replayed at 10. And I just don't know yet if I can be here Thursday. So this is the heads up. Do my newsletter as always, but I'm just giving you a little bit of a warning here. So let me just wrap this up here as we're about to go to Steve Rhodes. Should be a wonderful show with Steve, and of course all the other Tiger technicians. What we've got here is in the 1 minute chart. This is only a leg. This is a peak D. You remember I used that fake D A there, so that's not the issue. But it's a leg. It's a peak C in the 5 minute. It should still be a higher high, and it's a leg. If it fails, you're going to be going below 52, 52, 60. I think below 50, 60, everything fails. So far, higher highs, higher lows. Have a wonderful rest of the day, and I will see you tomorrow early morning, 8 o'clock.